Welcome to Mex Moves, our weekly podcast where Eduardo and I break down the topics and headlines shaping Mexico's business and finance world. How are you, Eduardo?
I'm doing well, Damien. Thank you.
Good. Are you excited that we're doing this by video for the first time?
Breaking ground like always, Damien. Breaking ground.
Well, anyway, this week we have two great interviews. One with Diego Solórzano from the AI firm Desteia. Desteia basically helps Mexican companies importing and exporting to the US reduce trade and logistic friction by automating a lot of the paperwork and other issues involved in trading between the two countries. And we interview Steve Fisher, journalist who writes for the LA Times, also written for the New York Times, Wall Street Journal. Brilliant story on the recovery of a gold mine in La Ciénega in Sonora. And before that, Eduardo and I will talk about some of the big stories. Mexico becoming the US's biggest export market, pick up in foreign direct investment to Mexico. Good news, the Esentia IPO was priced, albeit below the range. ASUR buying as airports in South America, which we'd already flagged, and some other headline news. So I guess, Eduardo, the main story here is, well, the first story at least that I think we should address, if you agree, is Mexico becoming the US's top export market. Did you get a chance to see that?
Yeah, it was headlined by the Consejo Coordinador Empresarial. At least that's what I got the news from, and it's an impressive accomplishment. Obviously, with the retaliation tariffs, that might be some of the explanation that tells us why Mexico has become the largest export market for the U.S. in the January-August period, with a value of $226 billion, 15.8% of the U.S.'s total exports. Nothing to be ashamed of. On the contrary, Mexico has become this huge market for America, which I think gives it leverage in the USMCA trade negotiations later on. I hope, at least, that as this country consumes a lot of U.S. goods, the United States, the Trump administration, will see the free trade agreement as a positive agreement for its own businesses and companies. That's the hope, I guess. We'll have to wait and see how it evolves, but it's a great news for Mexico and for the U.S. to have its neighbor consuming so many products from America.
That's right. I mean, clearly the CCE and then put out a press release, in the hope that it would send a message to the U.S. how big Mexico's become, now bigger than Canada. And the New York Times picked up that CCE press release, put it out, very favorable sort of pro-Mexico story, which we're obviously delighted about. And in the press release, as you mentioned, it said that Mexico, based on USTR numbers, Mexico is now the number one destination in 24 export industries: energy, electronics, iron, steel, cereals, and it's number two in another large group. So that basically 3 out of every 4 major U.S. export categories rely on Mexico as number one or number two market, and that I'm sure will be used by Mexico and allies of Mexico to get USMCA over the line. I think if we look at, Eduardo, why this may be the case, why Mexico's just edged over Canada. So as you said, it's 15.8 and Canada is 15.76. So it's a tight race between the two. I think the tightening of USMCA rules of origin, basically, if you don't meet USMCA rules of origin, you're liable in most cases for 25% tariffs from Mexico to the United States under Trump's new tariff regime, means that there's a massive incentive to buy your inputs from the US rather than from Asia, China, Europe, you name it, South America. So I think that apparently about 85%, although there's a little bit of debate about this number, of Mexican imports now comply with the USMCA. But, a year ago, it was much lower than that. It was about 50%. They did comply, but they didn't bother to report that they complied because the tariff of non-compliance was 1 or 2% or 0 in some cases. So now they have to report that they comply, and they actually have to comply. And so that's probably helped. And in addition to that, I think what's probably helped is that Mexico's put, higher tariffs on Chinese goods. So that also helps incentivize buying from the US. So I think those are two factors important. I don't think it's important from a size point of view, but also remember that Canada boycotted certain US consumer goods, US bourbon, and there's quite a strong kind of anti-US feeling in Canada. That led to a reduction, significant reduction in those consumer imports, which are dwarfed by intermediate imports in electronics and cars and steel and so on. But still, considering that the gap between Mexico and Canada was only 15.8 versus 15.76, even half a billion less of US imports in Canada might have tipped the balance. And also remember that Canada put some punitive tariffs on about 30 billion Canadian dollars of US goods. So that plus the kind of consumer boycott might have tipped the scale. But I think the underlying trend, which is great for Mexico and great for the US, is that Mexico and the US have, as the AmCham, American Chamber of Commerce, has put out in a paper by Pedro Casas, they've moved to a kind of co-production model where goods go into Mexico, get value added in Mexico, get sent back to the US. But basically these goods have been produced in both countries. And that co-production model means that the more Mexico exports to the US, the more it imports from the US, as these goods are basically being produced together. And most of this import-export are actually US companies. So these are US companies on both sides of the border importing probably from themselves these products and then re-exporting them to the US. And that means that US imports from Mexico have a much higher value added than US imports from China. And I think the AmCham number was like 13 cents versus 1.4 cents for China for every dollar of US imports. And basically Mexico's large kind of long-term export boom to the US has led to this big increase in imports from the US. So we've moved to this co-production model and codependence model, and that's being reflected in these numbers.
And an additional interesting factoid, you might say so, is that 26 states of the United States, Mexico is the number one or number two export market, which I think politically also is very significant, especially when the negotiations get closer in renovating the free trade agreement, as many probably Republican states also are interested in keeping Mexico as a good neighbor, buying all these goods from America. It's taking place. And yes, I have a Canadian friend visiting today at home, and she was telling us how Canadians have stopped buying any American liquor whatsoever. So your point is right on the dot, Damien, about the boycott the Canadians have followed after Trump started aggressively putting tariffs on some of their products.
Personally, that wouldn't be a big sacrifice, as I prefer tequila and Scotch whiskey over American liquor.
But I'm sure the wine as well from Napa Valley is suffering a little bit by, who knows? But anyway.
So moving on, Eduardo, there was also a bit of fanfare in Mexico about this FDI number, 41 billion in the first 9 months of the year, which is a record. Now, the FDI numbers reported by the economy ministry, as data nerds will know better than I do, are different from the FDI numbers from the central bank. The FDI, or foreign direct investment numbers from the economy ministry, are gross numbers, so they don't net off investment by Mexico into the into foreign countries, nor divestments by foreign companies in Mexico. So the Bank of Mexico numbers will be will be a little bit or significantly lower than the economy ministers. And then that sort of divided into different categories. There's the reinvestment, which is the big part of foreign direct investment, basically companies like BBVA, Santander, GGM, Ford, and so on, reinvesting their profits in Mexico. And actually that number, that's the lion's share of foreign direct investment. And that number actually fell by 10%. So new investment, which I guess is a good thing, was up to about $6.6 billion, which is great, but is from a very, very low base. Basically, new investment a year ago, last year was extremely low. Last year, when new investment was terrible, the government obviously focused, as any government would do, on the total FDI number, including the reinvestment. Now they're focusing on the new investment number because that's a bit more beneficial to their narrative. And there was also quite a significant increase in which is intercompany loans, which is also existing companies borrowing, I guess, from their parent companies to invest. So it's good that the number is at a record. I think if you dissect it, it's perhaps not quite as good as the headlines suggest. Definitely need to look at the central bank numbers, which I don't think have come out yet. But in the end, what matters for the economy is total investment, foreign and domestic investment, both private and public. And that, as we talked about in previous podcasts, is quite negative. It's down high single digits this year compared to last year. So this number isn't gonna by itself get Mexico out of the doldrums, even if there's some positive elements in it.
Yeah, the interesting thing is how the government did highlight these new investments in Mexico, because there's been some criticism for the past few months that most of the foreign direct investment that was coming into Mexico had to do with reinvestments from companies that are already here, that it wasn't such a great number because no new companies were putting money in the country. And with the growth that we've seen from last year, which was very low, $2 billion from 2 to 6.5, obviously the government felt the need to highlight that number, as it is much interesting, or it does reflect some of that nearshoring phenomenon that was talked about much later last year, that apparently is beginning to materialize in a certain way with new companies coming into the country for the first time. And so that's the number that the government wanted to emphasize. And yes, we'll have to wait to see what the central bank numbers are when they release them with their with the balance of payment at the end of the month.
So, I'm moving on to corporate news. As usual, lots of stuff to get our heads around. I guess we could start off with the Esentia Energy Systems IPO that we flagged last week. It finally priced on Wednesday night. We'll start trading as we speak on Thursday. The IPO, from a pricing perspective, I guess was a bit disappointing. The stock price was set at 45 pesos per share versus a range of 50 to 72 pesos. So it priced below the range, which is never a good idea, and quite significantly below the midpoint of the range. The deal size was about $660 million, and the post money, once the proceeds from the offering are included, so some of the offering was secondary. It's a $1.3 billion post money market cap and about a 8 times EBITDA. Now, we talked about Esentia in some length last week, so probably no need to go into a lot more detail. I called around a few institutional investors to ask them why the deal sort of priced below the range, and on the face of it, was a disappointing outcome, although definitely better than not having the deal altogether. And these are, and I don't know how accurate this is, but these are some of the things I heard. I mean, first, that apparently Partners Group and Mubadala, the sovereign wealth fund from the Middle East, had put these assets on the block for a strategic sale, an outright sale, and hadn't got an adequate price. So the IPO was plan B, and I guess institutional investors don't particularly want to be the plan B. Secondly, the markets until Nvidia reported last night were very soft, and so the overall kind of global market conditions were poor, but especially for IPOs. So a lot of IPOs have been trading under the water in the US and in Europe. And actually, Aeroméxico's IPO, which we talked about a couple of weeks ago, has also traded very poorly, which may have hurt Esentia. Stocks down about bit more than 15% from the IPO, which is unusual when an IPO, you hope an IPO for the first month trades above issue, and if it trades below issue, the underwriters are probably going to use the green shoe, the over allotment, to stabilize the price. So it also means that the deal's slightly smaller than they might have liked. I don't know if in this case that was true or not. We'll find out later on. But that didn't help. At the time, I think Aeroméxico said it was sort of 10 times oversubscribed, something like that. And then the stock trades down. And I think if maybe investors should have listened to you, Eduardo, when a couple of weeks ago you mentioned that, Aeroméxico was running into these headwinds with the government shutdown and the cancellation of routes, and then the fight between the Department of Transport and Mexico. All of that sort of happened more or less as they were timing the IPO. And then thirdly, I guess, although no surprise in this, and we talked about it in some detail, Esentia's business model is basically long-term contracts with CFE. Therefore, there's some regulatory risk, which hasn't transpired. The company's got very high margins, 85, 86%. It's generated a lot of cash flow post the capex, as you'd expect from this type of business. But anything that has 80% of its revenues with one client, and when that one client is in the public sector, and then in the Mexican public sector, there's obviously some discounting going on, and I guess that's why the price came in a little bit below.
No, it's disappointing. Now the question I have is whether at this price, it's more attractive to coming into a company with the profit margins that it has. I don't know what the sentiment was negative, but maybe the long-term sentiment might be positive. You're willing to risk on a company that has all these contracts with the government, but has certain profit margins. I don't know if in the future it will bounce back and reach levels that couldn't reach at the very beginning.
I think beyond question, the IPO is good for capital markets in Mexico, and most of the proceeds are primary, and those will be used to continue to build out, the gas pipelines that Mexico badly needs to keep its electricity running, and keep its electricity running at affordable costs. So it's great that the IPO happened. And it's great that Esentia has this money, and that this money is going to be used to build out, more pipelines for the most part. And that's going to help Mexico's, nearshoring. It's going to help data centers and everything else. So that's without question the positive element to it. And, very few people will care outside, the immediate kind of players in the transaction that it came a bit below the range. So moving on, the other big corporate news was ASUR, which we'd also flagged. It finally, as you saw, agreed to buy Motiva's 20 airports in Latin America. I think there's 17 in Brazil, and then another 3 between Costa Rica, Ecuador, and Curaçao. ASUR's paying about $936 million in equity, and another billion, a little bit more than $1 billion in debt. It's an interesting transaction because it's very significant from a passenger point of view. So ASUR handles about 71 million passengers a year across its existing airports. Obviously, Cancun is its key airport, its flagship airport. This is going to add 45 million passengers, so it's a 60% increase in passengers. But it's only going to contribute about 10% or $240 million in extra EBITDA. So basically, these airports are a lot less revenue generating per passenger than ASUR's existing airports. And my guess would be the strategic kind of logic would be that, and it's not easy, and a lot of the revenues and EBITDA is a function of the regulatory regime, but ASUR to the best of its abilities, will try and raise the revenue per passenger. There's clearly, from what I just said, a huge amount of potential upside, and therefore bring the EBITDA up and make this a successful transaction. I also think that ASUR is struggling a bit with the Cancun airport. Numbers for September just came out, and Cancun airport, again, sort of flattish growth. So ASUR has been diversifying. They bought retail outlets in U.S. airports like JFK and LAX for like $300 million. They announced that earlier this year. They're doing this. They obviously also have the Puerto Rican airport. So they're using their massive cash flow from a basically non-ex-growth business to a large extent to diversify and apply their know-how that they've acquired, especially when it comes to non-aeronautical revenues, which basically their revenues are split between regulated aeronautical revenues and non-regulated, in the case of Mexico at least, commercial revenues, car parks and shops and hotels and anything else that is outside the tour, the tariff you pay when you buy your ticket that goes to the airport. So we'll see how it goes. I mean, it's 20 airports. It's quite complex. The regulatory regimes are a lot less favorable than Mexico has, and the concessions, all expire at certain different years. So, they're also running some concession risk. But, without a doubt, Fernando Chico Pardo is proving a very busy man this year with the Banamex transaction, this transaction, the U.S. Retail airport transaction. He's really, even though he's in his early 70s, he's keeping busy.
Very impressive, no? In that sense, this was not a small little transaction, $900 million. It's quite a deal, I would say. One thing that I would point out is that out of the 20 airports that ASUR is acquiring, 17 of those have a concession that will still last for 15 years. So I guess that gives ASUR a little bit of a good time frame to revamp the operations and, as you said, increase revenue per passenger with a great upside because of those 45 million more passengers that ASUR will be now servicing with these terminals in these countries, mainly Brazil. So it's another very impressive move by a Mexican company that it's becoming a multinational without a doubt with this acquisition. It's airports in Colombia, Puerto Rico, and this retail space that it acquired in the U.S. So lots of moving pieces in ASUR's picture right now, and the time will let us know how everything settles.
That's right. And meanwhile, OMA, which is the less acquisitive airport of the three that are listed in the Mexican stock market, continues to report great numbers. Its year-to-date traffic for October traffic came out was 9%, where, as I mentioned, for the year to October, ASUR was flat, and GAP, which is mainly the Guadalajara Tijuana airport, was up only I think 3%, hit a little bit by migration crackdown in the US, which is affecting Tijuana especially. So OMA, which has sort of becoming this very big kind of nearshoring northern hub for traffic, and you're seeing it do significantly better than the other two airport groups. They're now controlled by, I think, Da Vinci, the French group that bought control from FinTech Advisory, the David Martinez hedge fund, in turn took it out from ICA. So been a lot of changes at OMA, but the operating side has remained very, very strong.
Maybe the export element that we talked about from the U.S. to Mexico has increased business passenger flights to their airports that OMA has, mainly in Monterrey, I assume. So kudos for that group, and we'll have to wait and see. The Cancun airport, we talked about it long ago, Damien, that Cancun was having some tourist problems, so that I think affected, or it's affecting ASUR or maybe even the Tulum airport, although I heard that it was doing very well at the very beginning, but that it hasn't panned out as expected over the past few months as competition for ASUR's Cancun airport.
That's right. I think you can now fly from, or about to be able to fly from Monterey to Paris. If we have any Monterey listeners, I'll be happy to hear that. Yeah. So moving on, there was a hard discounter, Tiendas 3B, reported pretty strong numbers. They reported late because they're quoted only in the New York Stock Exchange. Their sales were up 37%, and their same-store sales were up nearly 18%. And then the companies did an IPO last year, February last year. But if you compare that to ANTAD, the Association of Retailers, which Walmart's actually not a part of, but its same-store sales for the third quarter were just over 1%. So 18 versus 1, and Walmart Mexico was just below 4%. So there's definitely in this time of difficult time for growth and difficult time for consumers, there's a sort of focus on value, and hard discounting obviously offers value. So you're getting people trading down to kind of to lower cost stores like 3B, because Barra, FEMSA's hard discounter, also had same store sales of, I think, 10%, not as good as 3B's, but far higher than the ANTAD numbers or the Walmex numbers or the OXXO numbers for that matter. So as people see their incomes come under pressure, they want to go and reduce their weekly shopping bill, and the way to do that clearly is to go to hard discounters that, in the case of 3B, it's more than half of their goods are their own brands, which enables them to sell at a lower price than a Walmex, which still mainly sells branded products, and I think that plus some other issues helps them have a slightly lower price point for the same product if you don't care about brands. Have you ever been to a 3B, Eduardo?
I've seen them many times. I haven't gone in. I will. I think I need to get into that to see what are they offering, how are they offering. But what impressed me as well from the report was that they've upgraded their goal for the number of stores that they want to have in Mexico from a previous 12,000 number to a 14,000 number from about 3,000 that they have right now in the country. So they're very aggressively moving forward, and I guess the results that they posted give them the confidence that they can achieve growing margins, or at least keep the margins that they have with a greater presence in the entire country. So it's a good competitor that it's doing well in times of trouble, which I think that's what in times of trouble, in the sense that consumers have become more conscious more than anything on prices, and are looking for better deals than before. So they're capping on those trends and planning to continue doing so in the future.
Yeah, there's an area that in Walmart in the US recently upped its guidance, and the stock has done well. And what analysts have been saying about Walmart in the US is benefiting from affluent customers down trading to Walmart, where they would otherwise in better years have gone to more expensive supermarkets. Whereas in Mexico, people, not necessarily from Walmart, but from Soriana or Walmart or Chedraui or whoever it might be, are sort of down trading a little bit to the hard discounters. So Walmart's market positioning in the US is slightly different, it seems, from these numbers, at least, to its market positioning in Mexico. In the US, these cost of living pressures, these affordability pressures are hitting Trump, and in the recent elections in the US, kind of benefiting Walmart to an important degree. But so far, at least in Mexico, it's not that Walmart is doing worse than average, but they're benefiting more the hard discounters like 3B and Barra and Neto, which are the three big ones.
Correct. Shall we move to our interviews, Damien?
I just wanted to mention one other thing, because more up your street than mine. I don't know if you saw the headline that Grupo Salinas, the Ricardo Salinas empire, is close to selling Mazatlán Football Club, which is in the Liga MX. And to Atlante.
I saw that.
And it's quite a big ticket, $65 million. And then apparently Mazatlán, despite its name, i.e. Mazatlán, will move to Mexico City, maybe to the Estadio Azteca or Estadio Banortes, it's now called. So we're seeing quite a lot of movement in the football space. We talked about Innovatio Capital agreeing to buy Querétaro for $120 million. That's a private equity fund. And Grupo Orlegui, which currently owns Atlas, which I think it bought from Grupo Salinas, is also exploring a sale to avoid owning more than one club, which is the FIFA rules. Orlegui owns a couple of clubs, so that would be required for Mexico to meet the FIFA rules. So there's quite a lot of interest in this commercialization ahead of the World Cup next year of the football teams, and new money coming in.
I don't know if you know this, but Atlante used to be a Mexico City club many years ago. So I'm sure their Atlante old diehard fans will be delighted to hear that the team will come back to its origin, which was Mexico City. And the transaction, Grupo Salinas also, if I'm not mistaken, also owns Puebla. So maybe they are doing this sale for the FIFA rules that prohibit ownership of more than one team, and also maybe for some of the financial problems regarding tax payments that Grupo Salinas is facing, and the Supreme Court rule against it makes it imperative for them to get some cash.
I think that the amounts from this sale, if it is rather minuscule
compared to the other thing. That's right.
So let's move to our interviews.
Let's do it.
So really excited to have with us today Diego Solórzano. Diego is the founder of Desteia, logistics and supply chain startup driven by AI. How are you today, Diego?
Doing great. Thanks for having me.
Our pleasure. So, Diego, why don't we kick off by understanding a little bit about how Desteia uses AI to drive sort of logistics and supply chain optimization?
For sure. I think that the main concept that we do is we structure what is by nature very unstructured data, right? If you talk to anyone in logistics or supply chain or global trade, international trade, etc., a common complaint that you will hear is how very unstructured everything is, right? You receive an email from your vendor, from your 3PL, you have to go into multiple web portals from different steam shipping lines. You have to, maybe communicate through email, Excel spreadsheets, PDFs with your customs broker, etc. Data is very broken for anyone who has ever done any importation or exportation process. And that's kind of like the gap that we identified and what we use AI for. We are able, through, again, some different techniques and models, we're able to structure all of these very by nature unstructured data, and based upon that structured data, help companies make decisions and automate processes. But really, it all starts from the fact that global trade is very, very disconnected in terms of systems, in terms of different formats, etc. And we're bringing a lot of clarity and structure to what's by nature very, very unstructured data.
And are you providing kind of dashboards so that they have lots of information and they take decisions based on that information? Or are you actually are the AI agents taking decisions for them? Or are you doing a bit of both?
A little bit of both. Right now, what I would say is I can divide maybe the company in 3 different phases, right? Phase 1, all about structuring data and maybe helping you automate a few touch points and a few, data pass-throughs. The second stage of the company that we are, right in the middle of is now that we have a lot of this data that was previously inaccessible, how can we actually help you gain insight from those data? I'm happy to provide examples, right? But now this stage of the company, we're given the large amounts of data that we are structuring, helping companies actually gain insights from that data. And the third and the future, right, is all right, now you have structured data. Now you have insights about, what you could be saving thanks to data that you previously had no access to. Now the next step is, can we as a product, as a company, actually help you execute on those findings, on those savings opportunities, without necessarily having to have human intervention executing. So I would say that, that has been the evolution of the company. Right now, we've been growing a lot in terms of providing structured insights to users. And eventually, we do hope that we will actually also, through agents, through other, methods, help you execute on the savings that we've helped you find.
So to bring it down a bit to earth, can you give us some, as you mentioned, you would be able to do some kind of real world examples of how you've saved money or improved revenues at a client, as specific as possible?
Certainly. We have this very large tier one automotive supplier, right? 60 manufacturing plants in Mexico. And the problem that they came to us with is the fact that they have a large team of customs and logistics professionals, right? The thing is, they receive more than 1,000 emails per day and more than 1,500 documents per day, right? So imagine, being a user, right, or an operator at this company. You're basically parsing through more than 1,000 emails per day to complete your workflows and complete your job. And pretty much that's all you're doing. Even if you are the manager of such team, what you are really focused on is, all right, can we cross successfully between Mexico and the United States? Can we cross merchandise back and forth, imports and exports? Can we do that successfully? Successfully being the key, right? Not efficiently, not optimized, not knowing really what's happening behind, the crossing of the merchandise. But that's really where this company came to us with, right? Or again, 1,000 emails per day, 1,500 documents per day. And as I mentioned, right, the first thing we did for them is, all right, we're going to get you out of this email. And we were able to successfully get operators off the email, meaning these operators at this company don't have to review document by document anymore. This is all done by our models, right? As soon as they receive an email, our artificial intelligence basically picks up that email, understands the contents of the email, the contents of the documents within those emails, basically attaches together all the relevant documentation pertaining to that specific shipment and to that specific email, puts it together, reviews all the documentation, just flags alerts if something's wrong, right? And basically the process that before took north of 90 minutes, actually north of 3 hours to complete, has now considerably shrunken to, less than 10% of that. Because again, the machine is running the reviews and all the workflows that normally people would have to do. But secondly, right, and as I mentioned, one thing is to structure the data and start doing some automations. The second piece that we did for them is we are now actually providing them very, very deep insights into opportunities. What types of opportunities? For instance, we were able to discover, some of their carriers bringing information late in the day so that they could charge overnight storage, right? That's a clear savings opportunity. We were able to uncover the performance of all of their carriers based on the time in which, how long it took for each carrier to respond to this company, right? And how much they could save in terms of time if they were to choose maybe different carriers or maybe different workflow structures. We were also able to provide them a very good understanding of how many errors per document per user you could find in all of these documents, right? So again, I think that I like this example a lot because it really talks about how you go from a very unstructured world, again, 1,000 emails per day, 1,500 documents per day, to structured workflows. Again, people don't really have to review the contents of the documents, only focus on the red flags that the system has done for them. And at this stage now, actually identifying savings opportunities in terms of carriers, in terms of routes, in terms of times of the day, in terms of other document mistakes, right? And we expect that eventually we can act on those executions. But, to quote a specific example, that's one of our most successful implementation cases.
Hi, Diego. Very impressive what you're just narrating. Let me put it in my own worldview of how I use AI. And I assume it's a little bit similar, or maybe I'm completely wrong. But I sometimes get documents, I put them through AI to give me the highlights of a contract or whatever I'm reviewing.
Mm-hmm.
I guess in your case, it's the same large language model, but specifically targeted to a certain language that it involves logistics, transportation, and things like that, so that the AI puts out this analysis in a plain language format for people to highlight those elements that are important. Even in your case, I think it goes further because it only shows me a red flag if there's something wrong, but it goes ahead with everything else much faster than a human could have done it by himself or by a group of people. Am I right in more or less understanding what you described?
Yeah, I think that's the gist of it, right? The power of LLMs to structure data, right? And we discuss what other things LLMs are good for. But one of the, I guess less talked about or less inspected use cases of LLMs are to structure data given the context, right? So yeah, for sure, we use LLMs, a bunch of them at this point, right, to structure the data without you having to manually upload anything, right? Basically, our product is a widget that you install in your email. And then to your point, Eduardo, around specific training, we've spent the last 2 years and a half, training to our very, very specific use case, which is logistics, which is customs, which is supply chain, right? So at this point, I'm pretty sure that we have, for sure in Mexico, right? Probably the largest, most comprehensive, most complete data sets of what are trade documents, what are trade regulations, and what are the specific workflows that people in logistics and customs and international trade need to complete. So yeah, I think this is the power of training on a very single and specific use case.
So Diego, you save a lot of time for those that implement that widget, and you probably allowed companies to relocate their personnel, if I'm not going to say fire them, but relocate personnel to do other tasks in the logistics industry. I mean, I'm impressed by AI and how fast things are done. I assume that in the case of your specific training LLMs, it saves tremendous amount of time. It gives tremendous amount of it highlights tremendous opportunities, saving cost, like you said, for a carrier or for a company to find a better carrier that does not charge overnight prices,
right.
Customs that go through faster than they did before. How much savings in time, in money, can you tell us a little bit about the companies that work with you?
Absolutely. And yeah, I think this was also a very interesting evolution of how we engaged in conversations with these companies, right? Because yeah, at the very beginning, right, it really was a lot about, all right, how much time are you going to save my team so that this team can focus on something else? And it's actually very interesting, right? Because we can prove that more than 50%, 70% of the time that we were spending, certainly on document reviewing, document classification, document extraction, that goes away, right? But despite that, we haven't heard of a single one of our customers actually firing their workforce, right? And I think it has to do with the fact that all of these companies want to grow their operations. And instead of hiring more, then, all right, how can we 10x our operation with the existing team? So I think that's more the mindset going in. For instance, the other example, this one we actually, we did talk by name about, was when Kimberly Clark is one of our very large customers. We're very grateful to them and working with them in close partnership. We actually have a quote from the champion of our project, basically saying that the ROI that they got from Desteia was in under 6 months, right? So, you can see that at least, some rough math, that's what, 50%, right? Very, very quickly, 100% in 6 months, right? So we've been laser focused and are originally talking a lot about, all right, how do you save time? But more and more customers, companies are finding that the true value, the true power of this type of insight is actually having access to data and opportunities that you didn't have before, right? Think again of the company that I just mentioned, right? You didn't know what was trapped in 1,000 emails. There's no way you could know that, right? You don't know what you don't know. It actually takes a lot of, analyst time, or would have taken a lot of analyst time, a lot of, supply chain and operations research time to kind of step back, try to force that data into a model to give you some insights, right? But now basically AI gives you that immediately, right? So I think the biggest power that we are actually unlocking for these companies is giving them access to analytics, to things that they could not know about before. And I think that's very, very powerful.
And let me ask you, how did you come about in developing Desteia? I mean, it's a very specific focus, laser focus type of operation. How did you got involved into developing this AI automation and the whole process that you just described?
Well, personal story, to be honest. My background's in stats. I did, actuarial sciences in college, was a first-time founder at a company called Carrot, and eventually made my way to study at Stanford. And I did AI, focused on AI at Stanford in 2017. And basically, I completed the computer science track on all of the AI courses on AI. I basically went through that track. So that's, kind of like the AI background on my story. And then the logistics and imports, global trade part of my history is I actually grew up in northern Mexico. My mother's family, and therefore a lot of my upbringing, is from this small city in Tamaulipas called El Mante, right? The reason my family is from there is my, I guess, great-great-grandfather started the sugar manufacturing facility that gives life to that town. And I was the kid growing up, the kid in the cane sugar field, going to the factory and then taking the sack of sugar from the factory to a train and onto a truck and to, et cetera, et cetera. So I grew up around manufacturing. I grew up around what I now understand the global supply chain profession. And for me, it was fun, and it was the thing that I grew up around, and took me a long time to realize that was actually someone's job. And one day after I graduated and after I lived in San Francisco for several years, a friend of the family called me up and said, "Hey, I know you've studied AI. Can you help me solve this challenge?" And goes on to describe how very manual and unstructured all of their workflows were for imports and exports. And so I thought, all right, if I was able to, maybe find an opportunity here and solve it for one company, maybe there are more out there. And lo and behold, right? Indeed, there are a lot of companies, and mostly all companies that we talk to, that work in this manner. And so that's why, that's the genesis of the company.
And getting back to the project, Desteia raised 8 million in seed in February of this year. The two ventures or three more venture capital companies participating. What can you tell us about it? And have you deployed all the capital already, or are you looking for more capital?
In total, we've raised 11.5 million, right? 3.5 million in a pre-seed, 8 million in a seed. It's, sounds like a lot, right? Like for pre-seed and seed. But we did know that since we were laser focused on serving the largest companies in Mexico, and by extension, some of the largest companies in the world, right? I mentioned Kimberly-Clark. So you can imagine that type of profile. You can imagine that sales cycles are very, very long, right? And it is the case that sales cycles take normally over 12 months. And we need a lot of capital to hold on that, right? And to basically survive the first few years. And so in terms of capital, I think we have a lot of runway. We've been very obsessive about controlling our costs. Most of our investment has gone into the product development. Nowadays, a little bit more and more into go-to-market. But as we found, customers, as we found, some hints of product market fit, we feel very, very confident and strong in our cash position. And we think we have, more than enough way for the next 3 years. So raising capital at this point is not a priority for us. We're laser focused on finding new customers, serving our customers very well. And frankly speaking, creating the best, logistics and supply chain product for this side of the world.
So, Diego, I'm guessing that most of your clients are Mexico-based right now, and you're Mexican. Why are you living in San Francisco?
Oh, three things there. I'm not living in San Francisco anymore, so I need to maybe update there on LinkedIn. So I'm now split my time between between New York and Mexico City. But something that's very interesting, Damien, is even though all of our companies are Mexico-based, they are all American companies, right? And if you look at what types of companies make up 90% of the volume of imports and exports in and out of Mexico, you will find that it's the global multinationals, right? Kimberly-Clark, again, is a perfect example, right? A company that is, based HQ in the United States, right? But has a large manufacturing in Mexico, and from Mexico exporting into a bunch of different countries. So that's really the profile of companies that we are going after. And because of that, right, it just turns out that a lot of these corporates are also in New York. So we figured, all right, we have to be in both places, because in the end, even though if we start with maybe the Mexican entity as the original point of contact, all the contractual aspects, procurement, especially IT and very long IT processes, they are all global based, all US based, right? So it made sense for us to kind of like split between New York and Mexico. And now I spend most of my time in Mexico City, right? But we do have a team in New York, and I maybe go there once a month.
And then most of your engineers and your product people are based in Mexico then?
Most of our engineers and product people are based in New York, actually. And then most of our, go-to-market operations team is based in Mexico.
And why are your engineers in New York? Are they just, it's easier to find good engineers at a given price? Because you'd think that Mexico would be price competitive when it came to engineers.
I think we have a very specific type of engineer, right? That was able, or certainly 2 years ago, right, was able to do large-scale AI implementations. And I think there was at the time, maybe still a little bit today, a lag between the talent that we could find for that specifically, again, large AI implementations in the US versus Mexico. So I think that's one of the reasons. The second part of the reason, and maybe, maybe less obscure of a reason, is I lived in San Francisco for 7 years. I worked for 4 years at a company called Blend, basically from Series C all the way to IPO, where I did a lot of product focused on AI and machine learning. And mostly all of my, engineering network, my co-founder even comes from Blend. And when we were hiring our initial team, we reached out to specific folks that we wanted to hire from Blend. It turns out they lived in New York. So we hired them there because we really wanted to work with them. So I guess that's also part of the true reason.
The cross-border trade, obviously, between Mexico and the US has been affected not a little by Trump's tariffs. I saw that Jaime Zabludovsky and Arminio Blanco just launched something called, I think it's called TAR, which is an automatic tariff calculator on a subscription basis, a kind of SaaS model type thing. Is that something that you also offer, helping people navigate the complexity of Trump tariffs, or is that something you lead to trade specialists like Blanco and Zabludovsky?
Yeah, we're not a compliance tool, right? So we don't necessarily help you navigate tariffs specifically, right? But this is a very good example, right, of what things can AI do for you from a more logistics and supply chain perspective. And maybe to give you an example that's related to this one is the Mexican law for international shipments, Ley Aduanera, right? It's going to change on January 1st. And starting in December 9th, a new manifestación de valor, right, is going to come into existence. We are not the company that will help you necessarily comply, right? But that's not the problem. The problem that these companies have, they all already have compliance systems, right? They should, right? These are massive companies. The problem is that this new law and these new processes requires a lot of new overhead that was not there before, right? Before, right, like when you had, whatever amount of time to, just comply with border crossings. Now with the new manifestación de valor, that work is probably going to triple or 5x, right? Because you have to have everything in advance that you were not, all of the country of origin, certificate of origins, have all the files together, right? All around, transportation and invoices, et cetera, et cetera, et cetera. That's going to triple the amount of work that a person has to put into a single importation, right? But that's the power of what we can do, right? Really, again, right, I go back to this concept. The problem is not that you don't know the law, or the problem is not that you don't have a system to comply. The problem is that the data that eventually goes into feeding those systems and processes arrive through email, right? Comes in a document, comes in an invoice, comes in a PDF or an Excel or a, zip or a doc, whatever, right? And then someone has to, download it, extract it, review it, and do something in another system. All of that work, right, to comply with tariffs, to comply with the new law, to comply with the manifestación de valor, all of that work that required analysts downloading, classifying, reviewing documents, we can basically take away, right? So that's really the power of what we're focused on. So again, like a system like the one you mentioned, we would be able to extract the data that fits into that system without humans having to, spend hours and hours and hours doing it, if that makes sense.
Absolutely. You mentioned, Diego, Carrot, which is where I first met you, I think. And it obviously went to zero some time ago. What have you, for those that don't remember, Carrot was a sort of Mexico zip car. You could rent cars by the hour, as self-driven. And correct me if your analysis is different to mine, but Uber turned up and basically disrupted the market.
That's
And specifically in Mexico, Ubers to begin with were very inexpensive because drivers are much cheaper in Mexico than in New York or London. So it really made not a lot of sense to be using Carrot. So what have you learned, and how do you think you can compete? Not necessarily with the Ubers, although Uber obviously has a fleet business. But how do you think you can compete with us for giant AI companies that one day are going to turn up at your door? Do you think there's a risk that the same thing that happened at Carrot might happen now with you?
Yeah, I think I have 3 huge lessons from that fantastic experience. The first one is, really around the product. And when you really think about it and you analyze Carrot deeply, we were kind of like the anti-business model. What do I mean by that, right? It's famous that Uber, right, has the most taxis in the world without owning a single vehicle, right? Or Airbnb owns the most hotel rooms in the world without owning a single asset, right? We were quite the contrary, right? Very asset heavy and technology light, right? Now I realize that a lot of our technology was actually outsourced. And so that combination of asset heavy, technology light versus the inverse, right? Technology heavy, asset light, I think was one of the biggest lessons that I'm never going to make that mistake again, right? And that's why very, very specifically, right? When starting this company, we are a software company, software as a service company, even a data company, right? We're not a company that's moving cargo around. We don't have that asset heaviness to us. So I think that was, the first big lesson. The second one, and related to this one, is really the product, right? As I mentioned, a lot of our technology for Carrot was outsourced. What do I mean by that? Is the sensors that we actually required for people to lock and unlock the vehicles, the app that you had to make a reservation and a booking didn't really belong to us. We pieced together a lot of this, and really nothing really belonged to us. So that created a very slow company that, even though we had some ideas on how to compete against Uber, we never could really execute on all of those because the system was very rigid, because we did not control the system. And maybe a better way to explain this second point on learning is I teach a lot, right, in universities across Mexico and sometimes in the US as well. And I give this analogy this happens mostly to MBA or like administration students, right, business students, where I say, all right, you have a brilliant idea, right? And then you naturally say, all right, I already have the people in Argentina that are going to code the product for me. And they don't really bat an eye at this. And so I say, well, that's a very, very wrong and bad approach to building a technology company, right? Imagine if Mark Zuckerberg, right, when he wanted to create Facebook, he went, oh, I have a brilliant idea, but I already have the people in Pakistan to, code this for me. It's unthinkable, right? It's really unthinkable. So if you really want to make a technology product, you really have to own the product and own the technology and own the team that controls this. And third and last, it's really it comes down to unit economics, right? In the end, because Uber being so cheap in Mexico and the reasons you explained, we could not have healthy margins, right? And our margins never really crossed 10, maybe 15% on a good month for Carrot, right? So really just obsessing with cost control, just obsessing with unit economics, being really, intellectually smart about how much a customer that comes to you costs and how much lifetime value you can extract out of those customers really is what makes a difference. So maybe those are the 3 biggest learnings that I have. To your question of, can this happen again? And well, I mean, it's moving at a rapid pace, but I really do think that the 3 things that will matter in the long term or in the long run are very specific. One, the type of data and that you have access to. Again, right, since we are plugging into our customers' emails and our customers' data that was previously inaccessible, there's no other company that has access to that once we are there, right? So we're actually, again, as I mentioned, building one of the most comprehensive, or I'm pretty sure the best data set for global trade in Mexico and the United States. I think data matters a lot. 2, I think the number of automations matters a lot, right? It's very hard to compete with a company that, hey, I have a 3-year deal with this, automotive company, and we have maybe 1,000 automations completing a bunch of different processes. If you want to rip and replace a company like us, right, that's already having 1,000 processes, it's going to be very, very hard, right? You would have to walk those 1,000 processes again. Is it doable? For sure, it's doable, right? But it's just maybe not something that you, as the owner of the business, are looking forward to doing, right? And third, and actually I think more, importantly, I really do think that we are entering an era of like multi-system cooperation world, right? Similar to the argument of how many automations do you have for a company, I also think how many integrations into core systems do you have becomes key, right? It's famous that any integration that you do with ERPs or SAPs or TMSs, WMS are hard, right? So if you have a company where you have spent a lot of time integrating into those key systems, it becomes very hard to rip and replace. So yeah, the pace at which each moving, it's fast, but I do think that the very specific local advantage that we're building should be sustainable in the long term. We'll see.
So yeah, that's quite. So there are some natural barriers for entry into the same type of business that you're engaged these days. A little bit of as much as you can tell us. How many clients do you have? Are you in the black now? And how many employees are you currently working with?
Yeah, we have 11 employees. We are going to end the year roughly around 1.2 million in ARR. But that's mostly like a 30x growth this year, right? Like basically all the seeds that we planted in years previous are really coming to fruition this year. Yeah, that's mostly what I can say. Yeah, I mean, I'm happy to answer questions around that, right? But like that's roughly where we are, and roughly all of our contract values range in between $200,000 and $300,000.
Well, Diego, this has been completely fascinating. I think you're in the cusp of a new type of AI industry, if I may say so. Thank you for joining Damien and me at Mex Moves. We hope we can continue the conversation later on as your company grows, and keep us posted.
Absolutely. Thank you very much for having me. Absolute pleasure.
Likewise. Well, it's an honor to have with us Steve Fisher, an investigative reporter based in Mexico City, who just wrote a magnificent piece on the story of the recovery of a gold mine that is a must read. For anyone listening, please go to the LA Times and read Steve's story. It has all the trappings of a great narrative. It has business, security issues, informants, sex workers, you name it. Great job, Steve. Congratulations.
Thanks so much, Eduardo. Thanks for having me on the show. I really appreciate it.
No, it's an honor for us. Steve covers security and has written for the LA Times, the Wall Street Journal, and the New York Times. So let's dig into your fascinating story, Steve. How did you got hold of Mr. Sanchez in the first place? I know he had been working to recover this mine in Ciénega in the state of Sonora for up to 3 years, if I'm not mistaken. So when did you got involved in the development of this fascinating story? And if you want to just give us a small resume of what the story tells.
Yeah, so I first learned about the story actually at the beginning of this year, in around January of this year, and learned of the situation of this mine from sources who informed me that it had been, this wild kind of tale, which is the sons of El Chapo Guzman, los Chapitos as they're known, had essentially taken over a multi-billion-dollar gold mine owned by an American entrepreneur based in Colorado. And he worked with Alejandro Sanchez, who's a Mexican-American who actually was raised in an orphanage in Hermosillo, Sonora, which is in the region where the mine is based. And Alejandro Sanchez had contacts in Mexico through other business dealings that he had in Latin America over the past decade. And he believed that surely it wouldn't take much more than a few phone calls to wrest this mine away from organized crime and return it to its rightful owner. It took him 3 years, as you mentioned, Eduardo, to coordinate, build a network of informants, and identify the hierarchy structure of the mine, and work in conjunction with the Sonora State Police to essentially dismantle the hierarchy on that mine, and then convince the federal government along with the state police, to actually go in and take it over. All of that took, strikingly, a number of years to achieve. The Mexican military needed, in order for them to act on more than one occasion, they requested up to $1 million just to have a meeting about this mine and about an operation to take it back. Alejandro is a man who has a very firm and kind of true north when it comes to the rule of law. And he, you can tell, just like I could tell, and in talking to him and in my interviews with him, he believes it so deeply that one should never, ever pay a bribe to government officials. And that guided him throughout his 3 years. And frankly, the mine would have been taken back sooner had he agreed to bribe government officials. He didn't, and he still succeeded with the help of an enterprising security chief at the time, state police security chief in Sonora.
It's amazing, and let me not forget the fact that Alejandro didn't want to take the job at the beginning, but your story tells a very emotional element of why he decided to help the first U.S. owner. Would you tell just a little bit about that, and then I would like to get your impressions on how does this reflect on the Mexican business world and the Mexican security world?
Yeah, so as I mentioned earlier, Alejandro was raised in an orphanage in Hermosillo, Sonora, and it was a place that made him who he is today. His role models, he met them there. One of them was the prefect of the orphanage, who looked out for him and cared for him and was kind of his father figure that he didn't have. His mother was a maid of a wealthy banker in Mexicali, and couldn't often afford to travel to see Alejandro or to send for him. And his father, he never knew. He never met him. And so at this orphanage, it was a really painful time in Alejandro's life, and he missed his mother very much, and he felt abandoned by her often. And he would talk to the priest there about how sad he was, especially when everyone else went home to their families or to see their relatives, and he had to stay at the orphanage by himself, and how lonely. And the priest said, you can talk to God about this. So he would go down to the chapel, and Alejandro would kneel in the pews of the small kind of orphanage chapel they had there, and he would ask God why he couldn't be with his mother. And he didn't really get an answer, but it felt really good to talk to God about it. And it felt good to have these people who were looking out for him and supporting him there. And he never forgot that. He went on to, his mother eventually succeeded in bringing him to the United States with her when he was 17. But he never forgot the orphanage, even though he hadn't been back till he returned to take back this mine. He hadn't been back in almost 40 years. And the reason he agreed to do this was because the first owner of the mine told him, I will give you 1%. I will donate 1% of the mine proceedings. Bear in mind, this is a multi-billion-dollar mine with an enormous amount of potential, to your orphanage. And with that, Alejandro was in.
Amazing.
He thought often about how, he would ask himself, what have I done for this orphanage that has done so much for me? And it took him a while, but it seems that the orphanage, and that will be made reality now that they've begun production on the mine.
It's amazing. Like I said, he has all the trappings of a fantastic narrative. We're not doing it service. Everybody has to read it. But moving forward, Steve, and what does this tell those that are listening who are investors or businessmen in Mexico about these sort of issues? I know probably this is a very particular case. It should be necessarily transported to a more larger environment in doing business in Mexico. But what do you get out of it, at least in this particular sense, in terms of business strategy or business problems that are that some people face. There is extortion in a lot of places in this country, as you know. What can you tell us about that issue?
The cost of doing business, I think, with ventures like this in Mexico is high. There's a tax, I think, that is enforced one way or another by organized crime on an innumerable number of businesses across the country. That certainly was the case. That was what organized crime tried to do with this mine in Sonora, and didn't succeed based on my reporting with the current owner. But it's incredibly dangerous to defy them, and the jury is still out. I mean, they are defying organized crime every day there, and so that is I've learned in my reporting of a number of different mines across the country who feel like they have no choice but to coordinate or cooperate with organized crime and pay them a fee. In the case of Alejandro and Jonathan Cooper, the mine owner, they were asked repeatedly they were rather threatened that if they did not provide 15% of their profits, that the cartels would take over the mine or would make life very, very difficult for their operations. And that is a reality, sadly, that happens across Mexico, I think, perhaps more than the general public even realizes. And it's expensive. It really increases the bottom line, as far as I can understand.
And that risk hasn't completely vanished for the mine, as you tell in the story. There is some elements that might bring back those cartel members to regain the property, as they didn't agree to pay any extortion claims. This problem of extortion extends beyond just the mining industry, and even small businesses pay in different parts of the country some of these taxation by organized crime. How spread is this, do you think? I mean, you talked about the mining industry, but in your reporting and security stories that you've done, is it a spread practice or just very focused in certain regions of the country?
Certainly in the mining industry, I think it's a very, very common threat that business owners have to navigate at one point or another. And in terms of extortion, cartels have been extorting at more and more granular levels across many parts of the country. If you have a small business selling chicken in Guerrero, there's almost no doubt that you're going to have to pay a tax. The same goes in a small business somewhere in Chiapas or Michoacan. Certainly in parts of Sonora, I mean, many parts of the country, are business owners, large and small, are subjected to this type of extortion. Any self-respecting cartel today in this country cannot allow a lucrative business to operate without paying them a fee. It's embarrassing. It shows they don't have good control of their region. And that's certainly the case in Sonora, and certainly the case with the current cartel that's trying to make inroads into the mine and take it over. They can't, they look weak to the outside. I mean, how could they possibly leave such a lucrative venture without, receiving some form of compensation for it? I mean, it's just, I think it's going to be a very, very continual, present threat for years and decades to come. That's the state of things.
Incredible.
In Mexico.
Steve, also, I mean, in reporting this story, you learned about government officials that were clean and tried to do the right thing. What's your sense on that arena? Obviously, the Mexican government is not clean in many aspects, but at least in this case, it worked the way it should be, but it's not necessarily out of the woods. What's your impression there?
There was a very, as I mentioned early on, there was a very enterprising security chief, Victor Hugo Enriquez, who was brought in by the governor to actually eradicate or certainly improve public security through eradication of organized crime in some of Sonora's most dangerous regions. And he came in and he sought to do precisely that. From what I was able to identify in my reporting, the security chief had a sweeping, detailed plan to take down organized crime and their grasp of different regions. And he really began to do that. And in addition, not only was his target taking back the mine, his goal was to bring some semblance of peace to the hundreds of ranchers in that region who could no longer safely go to their ranches without, certainly they had a number they had to call. They had to essentially get permission from the plaza boss, the regional boss there, the cartel. And if they were given permission, they would be allowed to drive to their homes. So that was the state of things. And the cartels had stolen thousands of head of cattle, slaughtered them for the henchmen that were protecting the operators on the mine, and selling the rest to fund their wars. And he succeeded in the short time that he was security chief before he resigned abruptly. He succeeded in returning a significant number of ranches to their owners in that region, increasing and improving security dramatically, where the region seemed to have been abandoned for years. And ranchers were finally able to return to their homes without asking permission from a drug lord.
That's a fascinating story. You said he has resigned abruptly without further notice of why he did leave the job that he was doing so well from your description.
People close to him say that he was no longer receiving the cooperation that he needed to be able to do his job. And so in a region where organized crime controls so much of the daily life and so much of business, the task of eradicating them is enormous. And there can be collusion, of course, between governments and the criminals that can make it even more difficult. But certainly in this case, the security chief did as much as he could, I believe, in the time that he had. And those ranchers, I know, are incredibly grateful to be back on their properties.
And those links between government officials and organized crime make it much more dangerous for people who are trying to combat these groups. Now, on that topic, Steve, you yourself went into the takeover security detail of the mine. Were you afraid? How did you feel in covering that mission to recover the mine?
Yeah, so I went in a convoy of state police trucks, and the governor sent an armored vehicle for me to go in to ensure my safety, for which I was grateful. And, we had to go through this town called Altar, which is one of the most dangerous regions in Mexico. It's a highly fought over plaza in the criminal world because it's such a lucrative drug trafficking and the past migrant smuggling route that is crucial for so many cartels looking to traffic drugs in the United States up into the Nogales port of entry, for example. It was a bit tense going out there, and you realize you're out in the middle of the desert. I mean, we're going for most of the trip, we're driving about 100 miles per hour just because it makes it a little harder for a cartel sniper to track a fast-moving vehicle. But then arriving on the mine, there remains, police security there. What was interesting is going out to the ranches around the mine and seeing the remnants of gun battles. One of them, there was 2 vehicles burned out, one across the road from the other, just riddled with bullets. And in the back of this, one of them was a truck. There were hundreds of bullet casings spent there that, just identified yet another crime scene, forgotten, lost, that would never be investigated. And, shell casings of 50 caliber weapons that are that can take down a helicopter, and cartel lookouts near the mine, and people who you could tell people had recently been there around this little fire pit. And so there's a level of tension. It's fraught out there, and you could tell that peace was very tenuous. There's one rancher who, didn't believe that peace would hold, and so he has refused to come back. And going out there and seeing, the cartel headquarters on the mine where they used to, have their bunks and their sleeping quarters, and just seeing everything out, you just realize it's really, really challenging place to ensure peace, and it's tense, and everything is tenuous. The mine owner has plans to reinforce, security out there, but it's going to be a constant challenge, especially when you have so much gold that everyone wants, right under your feet.
Well, the story is then it's not finished, Steve. There might be some fighting again by the criminal organizations to recover what is not theirs, but they claim that it is. What's your next step regarding this story?
Well, certainly I'm going to pay attention to the developments on the mine. I think it is a really interesting test case of the state of the rule of law in Mexico, and the state of things for business and how to operate in Mexico. So I will certainly be paying attention to how things develop, and certainly wish them all the best.
Well, Steve, thanks so much for being on Mex Moves. Again, for those that are listening, we're not doing a great service to a great narrative, a great story written by Steve and published by the LA Times. For those who want to see a little bit of what Steve encountered in that trip to recover their mine, there is a YouTube video as well that I highly recommend as well. It gives you a much clearer sense, or it adds up to the great writing that Steve did in narrating what he faced. So again, Steve, thanks for being with us.
Thanks so much, Eduardo. It was great to be on your show.
Take care and be careful.
So thank you for joining Mex Moves. I hope you join us again in the future. Give us a rating and follow us wherever you get your podcasts.
Thank you, everyone, for listening. We'll be back next week.